everybody, and welcome to the Fred Report Technical Market Conference Call for April 21st, 2011. Obviously, very interesting week so far. In some respects, the market is acting better than we expected. In other respects, it's actually acting a little bit worse. But the real key thing here for me is to step back and realize that we were looking for the market actually to be up at the first part of the week and down the second, and instead we're doing exactly the opposite. We were down the first part of the week, up here at the end. But overall, we have made still no net progress really since February. And certainly since the highs on the S&P, we have not even exceeded that high yet. Yet I got to tell you, I'm really excited. I think everyone else is really excited. It just is exciting, even though we actually haven't done anything. And that's one of the sort of classic here we go things where the market actually can sell off. We've still got problems with our monthly indicators being overbought. We basically have no changes in that. We're not really advocating trying to make a lot of money on the short side here, but what we are suggesting is if you're stopped in stuff, raise some cash and keep the cash and realize that with the indicators in this position, we can certainly trend down into May, which is what we've been looking for. And after that, I think we're going to have a barn burner second half of the year. I think the market basically looks pretty good for the second half of the year. So what I'm telling people that want to try to trade this thing is if you want to try to go short up here near these highs, that's certainly acceptable, but the real kicker is hold on to your money because the second half of the year is going to be where the action is. Now, the good news is if you take the close on the S&P yesterday, which is basically where we are right now, the spider's only up 39 cents. If you take that close and you punch it into the monthly oscillator, i.e. if we close next Friday, a week from tomorrow, right here, Fred's price oscillator does start to drop off. It goes from +9 to +6. And if we do that again in May, i.e. if the market just sort of sits here, it will drop down to +3 probably. And then based on that, we'll have worked off some of the monthly overbought conditions. So while we do not have to really get correction to drop the oscillator, we could, in other words, we could do it just staying sideways. My concern is with the sentiment levels and with the way everyone's jumping up and down that we could have some sort of a surprise and get a pullback. And if that does occur, obviously that's a better buying opportunity than if we just go sideways for a while and then start to break out. But either way, I'm still looking for the second half of the year to be pretty good. Interesting on bonds. Really no net change in our models. They're still suggesting breaking out above 95 and trading to 97, 98 on the TLT. The LQD, the corporates, are looking much better still than treasuries. That's where we would be trying to make our money on a bond trade. And I would be very aggressive on that bond trade with the idea being that we're going to take it now and then realize that rates will probably trend up in the second half of the year. What we're definitely seeing here with the earnings and with all the stuff going on is that our overall idea that the economy is going to get stronger and that inflation is going to be a problem into the second half of the year, all of that seems to be occurring, and I think it's going to continue to occur. So just be aware that that's happening. Now with gold is a terrible conundrum for me actually here. The reason I say that is the COMEX gold contract has gotten to 1501. My 14-month target is 1520, so we're very close to hitting that target, and I think we will hit that target with no problem. The real problem I have is honestly that target came from an analysis of the GLD, which is at 146.70 to 147. A good bit below 1500. So we may see COMEX gold go above 1520, although I will probably at least declare partial victory when it hits 1520. But what we're really looking at is the possibility of the GLD getting to 152 in 14 months, and I think that is, again, because of the inflationary pressures that we're seeing, a virtual lock. So I would be still equally weighted in gold. I would use dips in gold to buy gold. And the only thing I would say is when the GLD hits 150, I would probably be selling out of silver first and hanging on to gold, and realize that when gold does get up here, it's trading contra-seasonally, but the correction in gold from 150, because of sentiment and such on gold, could be a little bit more violent than people think. But we would maintain an equal weight in gold. We notice, by the way, some of the gold stocks like GG are acting pretty well, but when you look at the XAU, the gold stock index, it's not trading nearly as well as gold, and that's a sign that the big money is starting to not favor gold. Oftentimes gold stocks will lead gold. That doesn't seem to be happening here as much. So, maybe just a little bit of a cautious note on gold, but we still think 1,500 to 1,520, and again, that's 150 on the GLD, 152 on the GLD, which should put the COMEX gold contract at 1,520 or higher. The dollar is another interesting thing here. The UUP has very definitely broken support on the weekly chart, but the dollar index itself is testing the support fully. It has not broken it. If you look at the December lows on UUP, those lows are right around 22, and it's at 21.23 right now, down 9 cents. If you look at the dollar index itself, what you're seeing is lows back in December, a closing low of 74.23 versus 74.37 now. What that means is these ETFs may be getting a little bit out of line, and they will snap back into line. I would be very, very careful right now if I were short the dollar, especially because if I were short the dollar, I probably had a pretty nice profit. I'd consider really raising my stop losses to make sure that if the dollar suddenly reverses to the upside, that I don't get nailed, and I'd even consider closing that trade and declaring some victory on that. That's just a strange situation. Now we'll get into some stocks here. The first one, obviously, Apple has had a very nice